Welcome back to the Deep Dive. It is Wednesday, February 11th, 2026.
Great to be here.
So today, we're going to do a bit of an autopsy on the global economy, but we're doing it through one single company.
The company you see everywhere.
Exactly. You see them on the highway, you've maybe rented a truck from them, but you probably have no idea just how massive their reach actually is. We're talking about the Penske Automotive Group, or PAG.
And you're right, they hide in plain sight. You see the yellow trucks, the BMW dealership, and you think, okay, car guys.
Right.
But then you crack open their Q4 2025 earnings report, which just dropped this morning, and you realize, oh, this is a global logistics, trucking, and weirdly, an energy company.
It really feels like a barometer for everything, doesn't it? If you want to know how consumers are feeling, how trade is moving, even how the AI boom is going, you look at Penske.
But the signal they're sending right now is confusing.
Mixed bag would be the polite term.
Schizophrenic might be more accurate. I mean, look at the tension in these numbers. For the full year, 2025, they pull in $31 billion in revenue.
A staggering amount.
And they raise their dividend for the 21st time in a row. So if you're a long-term shareholder, you're feeling pretty good.
But that's the annual picture. You zoom in on Q4, just the last 3 months, and it gets ugly fast.
It does. They missed earnings. Wall Street wanted $3.19 a share. They delivered $2.91.
And revenue for the quarter actually went down, right?
Down 4% to $7.8 billion. They basically stumbled right at the finish line.
So our mission today is to figure out why. Why does a company that big suddenly hit a wall? And what does it tell us about the freight recession, luxury cars, and, this is my favorite part, the completely wild connection between a trucking company and the AI boom in Australia?
That Australia connection is amazing. But okay, vegetables first. Let's talk about the headwinds, the Q4 miss.
Yeah, why was it so tough? I mean, looking at the sales data, the drop in volume was startling. Same-store units down 8%.
But it wasn't everything. And that's the key. If you were selling Toyotas, you were probably fine. But if you were selling German luxury, you were in a world of hurt.
How bad was it?
In the U.S., brands like BMW and Mercedes were down 20%. In the U.K., their second biggest market, down 22%.
Wow. A 20% drop isn't a slow month. That's a trend. That's a collapse.
It is. You don't see that unless something structural is happening.
So what was it? Just the economy?
It's partly that, but management pointed to something really specific, a pull-forward effect from earlier in the year.
Oh, right, the tariffs. I remember this.
Exactly. All that noise in the news about new tariffs on European cars.
So everyone panicked, thinking the price of a BMW was about to jump by 10 or 15%.
And they rushed out to buy one. Anyone who was thinking about buying a car in Q4 or even early 2026, they just did it in Q2 or Q3 to lock in the price.
So they completely cannibalized their own future sales. By the time Q4 came around, the cupboard was bare.
Totally bare. But tariffs don't explain the other big problem in automotive, electric vehicles. The BEV numbers were just brutal.
Brutal is an understatement. In one comparison, sales plummeted 63%. That's 1,700 cars that just didn't sell. And Roger Penske was surprisingly blunt about it.
She was. He basically said the early adopter wave is over, the enthusiasts have their EVs, now you're selling to the mass market, and the mass market won't pay a $10,000 premium to, save the planet.
He went straight to the economics of it.
He said, point blank, until a battery electric vehicle costs the same as a gas-powered one on the lot. No credits, no gimmicks, the inventory is just going to sit there.
That feels like a huge reality check for the whole EV transition. It's just wallet economics.
And speaking of things going wrong, there was another operational hit that just shows how fragile everything still is. The cyber incident.
The Jaguar Land Rover hack.
Yeah.
And to be clear, this wasn't Penske getting hacked, right?
And no, this was upstream. The manufacturer, JLR.
Yeah.
But it completely froze their systems for 6 weeks.
6 weeks. So they couldn't, what? They couldn't ship cars, process orders?
Nothing. And for a dealer like Penske, that means you have an empty lot and angry customers. They think that one incident cost them 800 sales.
It's gone, evaporated. It's the downside of that just-in-time supply chain. A software bug in England can wreck a quarterly report in Michigan.
Yep. Okay, so that's the car side. Now, what about the trucks? Penske is a trucking giant, and those numbers were not great.
They were depressing. This is where you see the big macro signal that's kind of worrying.
The prolonged freight recession. We keep hearing that term.
But how can we have a freight recession when GDP is supposedly growing? It doesn't seem to add up.
It's a massive hangover from the pandemic. Think back to 2021, 2022.
Right.
Everyone was panicking about supply chains.
Right.
So companies bought every truck they could find to move stuff. Now the panic is over, but all those extra trucks are still on the road. It's a glut.
Too many trucks chasing too little freight.
Exactly. So rates go down, and trucking companies stop buying new rigs. Penske's new truck sales fell 14%. And maybe more importantly, nobody needs to rent extra trucks either.
Because they have idle ones sitting in their own lots.
Precisely. And that rental business is usually their cash cow. When that slows down, it really hurts their profits. It's like owning a hotel with empty rooms.
So sales are down, rentals are down, but they didn't lose money. And that's the pivot.
This is the pivot. This is what makes the company so interesting.
Yeah.
The reason they stayed profitable is what I call the golden goose.
Service and parts.
It sounds so boring, right?
Yeah.
Oil changes and brake pads. But while they were struggling to sell cars, their service revenue was up 6%.
Okay, I saw a stat in the report about their mechanics that I had to read it 3 times. Can we please talk about the economics of a Penske technician?
It is, I think, the most important number in the entire report. Management estimates that the average technician
Go on.
generates $30,000 in gross profit per month.
Wait, not revenue, gross profit.
Gross profit.
Yeah.
After you pay for the parts, the labor and markup is pulling in $30,000. That's $360,000 a year from one person.
How is that even possible? What are they doing?
It's 2 things. First, the car park. That's the industry term for all the cars on the road. Right.
It's aging. The average car has nearly 70,000 miles on it. So we're not talking about wiper blades anymore. We're talking about big, expensive repairs.
But it's more than that, isn't it? It's the complexity.
It's the tech multiplier. A minor fender bender in a new BMW isn't just bent metal. You've smashed a radar sensor, a LiDAR unit, 3 cameras.
And you can't just bolt new ones on.
No, you have to reprogram the whole car's computer. That requires specialized training and software that only the dealer has. Your right to repair is basically dead on these things.
Which gives them huge pricing power. But that leads to the darker side of this boom. There was a signal in the after-sales data about the consumer that made me really nervous.
You're talking about the financing for repairs.
Yeah. They said there's a big uptick in customers using third-party financing just to pay their service bill.
It's a classic red flag. I mean, think about that. Your car breaks down, the bill is $1,500.
Which you don't have.
But you need the car to get to work. So you sign up for a high-interest loan right there at the service desk just to get your keys back. That screams financial fragility. If you're financing a repair, you are absolutely not putting a down payment on a new car.
It explains the sales slump better than any tariff. The consumer's tapped out. They're keeping the old car running, not because they want to, but because they have to.
And there was another area where that financial strain was showing up, but in a more criminal way, the rental fraud.
Yeah, this isn't just a bounce check. This is high-tech stuff.
They called it digital reservation fraud.
So bad actors are using stolen credentials, real licenses, real credit cards from the dark web to reserve a commercial truck online. Everything looks fine on the screen.
They show up, take the keys.
And are never seen again.
Okay.
Or the truck is found later, but the money is gone because the credit card belonged to some poor victim who's never been near a truck.
The downside of making everything frictionless.
For sure. They think they can save $10 to $15 million a year just by stopping this. That tells you the scale of the problem.
That's over $1 million a month just in fraud.
Incredible. Okay, let's zoom out. We know the U.S. is a mixed bag. The U.K. is struggling. But one part of the world is just crushing it for them. Australia.
This is the aha moment of the report. If you think Penske Australia is just selling trucks for the Outback, you are missing the story.
They're selling power.
Specifically, off-highway power systems. These are massive industrial diesel generators from MTU and Rolls-Royce. And who needs massive, uninterruptible power right now?
Data centers.
The AI boom. Every time you query an AI, it burns a ton of electricity. These data centers are popping up everywhere, and they cannot afford a power outage. Not for a millisecond.
So Penske is selling the backup generators that keep the AI revolution online when the grid fails.
That's exactly it. And it is not small money. They're calling it their energy solutions business, and they project it could hit $1 billion in revenue by 2030.
A car dealer is becoming a critical infrastructure provider for Silicon Valley. That is just, it's the ultimate diversification. It's a brilliant hedge. Car sales are down, people still need repairs, truck rentals are slow, data centers still need power. It makes the company so much more stable.
Okay, so looking forward to 2026. They've got this cash engine from service, this growth engine from energy. What are they doing with the money?
They're buying competitors.
Yeah.
going on offense. The big news was the acquisition of Penske Motor Group
Which has the jewel in the crown, long go Toyota.
in California. The #1 Toyota dealer in the world. It's not a dealership. It's a 50-acre city dedicated to selling Toyotas.
And why Toyota specifically?
Because of Toyota Financial Services, their captive finance arm. In a world with high interest rates, where banks are tight with credit.
The car company with the best bank wins.
Exactly. Toyota can approve loans nobody else will touch. By buying Longo, Penske is buying into that credit flow. It's a $2 billion a year revenue move.
That is a huge bet. Speaking of money, management sounded really upbeat about tax reform. They kept saying one big, beautiful bill.
Which for them really means two very boring but very valuable words. Bonus depreciation.
Okay, break that down. How does a boring tax rule help a trucking company?
So normally, if you buy 1,000 rental trucks, the IRS makes you deduct the cost over, say, 7 years.
A little bit each year.
Right. Bonus depreciation lets you deduct 100% of the cost in year 1. It basically wipes out your taxable income.
Which means you pay way less cash to the IRS today.
And for them, that's an extra $120 to $150 million in cash flow every year.
That's real money. That's cash they can use to buy another dealership.
It's a massive tailwind, but it's still an if. It depends on politics.
One last strategic thing, used cars. The supply is tight, right?
It is. Because new car sales were so low during the chip shortage 3 years ago, there just aren't as many 3-year-old cars coming off lease now.
So they don't have enough used inventory to sell.
And they tried to fix it by buying blocks of used cars at auction in the UK. 1,000 at a time. It backfired.
Ow.
Hurt their margins. The cars weren't the right mix. They needed too much work. Turns out, when you buy in bulk, you get some junk.
So they're going back to just taking trade-ins from customers.
It's slower, but the quality and profitability are way better. It's the difference between a home-cooked meal and fast food.
That's a great way to put it. Okay, so let's bring this all together. We started with this confusing earnings miss. But under the hood, you see a company that's pivoting hard. They're weathering this freight recession and luxury slump by leaning on, well, on boring mechanics and exciting AI data centers.
It's a strategy of resilience. They're not just waiting for the storm to pass. They're building a better roof while it's raining.
Yeah.
They are fundamentally changing what it means to be an automotive retailer in 2026.
I love that. But I want to leave everyone with that one uncomfortable thought we hit on earlier, the repair financing.
The yellow light on the dashboard.
We keep hearing about a soft landing for the economy, that inflation is under control. But if the average person has to take out a loan just to keep their car on the road.
It suggests the soft landing might be happening in the corporate boardrooms, but down on the ground, the landing feels pretty hard.
If the consumer is tapped out on a repair bill, they are not going to be the ones to lead the next big economic boom. They're just surviving.
It's a really precarious spot. And a company like Penske, they're the canary in that coal mine. When service financing goes up, discretionary spending is about to come down.
Something to think about the next time you see one of those yellow trucks. It's not just moving boxes, it's carrying a message about the real health of the economy. Thanks for joining us.
Always a pleasure.
We'll catch you on the next one.